Good morning, everyone, and welcome to Trade Talk podcast. On Thursday, on the day of monthly expiry, we saw deep sell-off in our markets. It was just down and down throughout the day, and it was like mainly because of the break of important crucial levels like 22,600, 500, and later 450. Bank Nifty was up, however, the overall sentiment was down, and that's the reason we saw deep cut in the market. Also, it was expiry just before the major event of election outcome, and maybe that's the reason we saw a lot of unwinding of long positions. But if we consider the overall setup of the market, then it is very clearly a corrective pattern that we are seeing from the highs. The market managed to rally from the levels of 21,800 to 23,100 without any correction. And maybe that's the reason we are seeing correction beyond expectations. Currently, the markets are at 50% retracement of the entire rally that we saw. Also, we are very close to 20 days simple moving average, which is indicating us that the market has neutralized the trend. And from here, if we see the market is holding above the levels of 22,400, then we could see the levels of 22,800 on the minimum side and again 23,000 in the best case scenario. So the ideal strategy should be to look for holding long positions or creating any long positions with a tight stop loss at 22,400. Below that, we could see the levels of 22,300 and in the worst case scenario 22,200. For the Bank Nifty, there also we saw downward activity in the first half, but it quickly recovered back to 49,000 levels, which was unexpected. But already the Bank Nifty has completed its monthly expiry on Wednesday, and that's the reason the pressure was much lower. While looking at the entire pattern, 48,300 going to act as major support for the Bank Nifty, 49,000 going to act as resistance, and above 49,000 the chances of hitting 49,500 or 800 would turn bright. Below 48,300, again the Bank Nifty can fall to 48,000 or maybe 47,800. While looking at the setup of banks, I'm going to say stock specific activity as well as their overall fundamental strength, we are of the view that Bank Nifty should do well in the near term. Ideal strategy should be to look for adding positions in the market with a stop loss at 22,400, and if it stays about 22,600, then the chances of hitting 22,800 or 850 would turn bright. Also, if we go through with other indices, then there also we saw huge profit taking in metals, auto as well as in IT companies. IT stocks were under pressure mainly because of strong surge in the bond yield on Wednesday. It was around 4.6263 levels, but currently it is at 4.5354, which is little bit a relief sort of situation for IT companies. But at the same time, the bond yield is still above the crucial level of 4.50, which is a concerning thing. Also, if we go through with the global macros, then they are still not that favorable. Global markets are down because of surge in the bond yield, and crude is slightly below the important levels of 83. So broadly, all these global macros as well as global equities are not that favorable, but domestic flows are very important, and based on that our markets are going to perform at least for next few days till the outcome comes from the on the election results. Today also India will announce its quarterly GDP numbers, and that is also something going to support the overall sentiment in the next week. So we need to be more and more stock specific. At the same time, for traders, 22,400 should be the stop loss for creating any long position. That's all from my side. With this, I'm ending today's morning podcast. Thank you very much for listening us and have a great day to all of you.